Good evening, everybody. This is John Seville. This is your executive summary, and the markets continue higher. Of course, we're still, and this just goes to show the power of open range. We came down yesterday, tested a low, hit the 20-day moving average, and closed yet again above the open range. You can see that line drawn there at 1920. And as I mentioned, my expectation is that we would just kind of consolidate in this range for this week until open range, of course, resets again on the 1st of March next week on Tuesday. But an update, of course, today. We had 4.32 billion shares trade yesterday on the S&P 500, 4.12 billion today, and broke a new high over the candle back on the February 22nd. So I would expect that we will continue up into this 1965, 1970 level on the S&P 500, which means another 20 points higher. And what we would want to see is obviously really where the open range sets. So as I've been talking about in Trading Room, the key thing is to really look at how the open range is broken one way or the other next week. The way that we've been playing a lot of the positions this week, again, are very short-term trades in both directions, longs and shorts, and obviously a couple of earnings plays. Obviously, the ABCO worked out very, very well. That gap down about 40% on Wednesday. And the options, I believe, were up between 250%. Someone was saying some of the other options were up as much as 600%. So that was a big win on ABCO from Friday's executive summary. Of course, MYCC was a big win. I sold this out today just up around 13 or just above 13 for about I think it was about 250% roughly profit on the calls that we had purchased on MYCC ahead of earnings. Of course, on the losing side, CRI was one I had held some options in, lost 60% on that, but holding that one as it's rallied right into resistance. And there we go. And CRM, of course, I was holding some speculative options on that one as well. We talked about reducing the position ahead of earnings because of the again, only with these types of plays you want to risk. Well, we want to risk smaller amounts of money because it shoot up dramatically, and if it does it in your favor, you can make 200-300% like the other ones we just talked about. But this again was about a 58% loss on Salesforce. But then again, so you look at that, and this is why trading options during earnings is about small positions, but many positions, because if you can make 250% on OBDC, was it OBDC? ABCO, sorry, and another 250% on MYCC, then you've made a cumulative total of 500% there, and then you lose 50-60% on the other two. You're still way ahead of the game. So again, it's about small positions and spanning across lots of positions that have the same type of criteria. Now, in terms of, there was another big performer today. SGMS was one of the ones we'd alerted to people last week. Actually picked up some calls on this today at $6 calls. This one has a report of great earnings, is up 25-26% after market. So that should kind of rally straight into its moving average resistance. By the looks of the after hours prices, it was trading as high as $8. So it's going to kind of come into that resistance. So again, we'll see how it opens, but I'll look to take profit on that. Another one that we took a position in was SRPT calls. Again, the speculative play. They're expected to have an FDA, there's rumors of an FDA approval coming out on this one. Now, after earnings, they're only down 1.1%, so it's basically holding its current levels. But the street's basically waiting for the FDA approval. If you go into Yahoo Finance, there was an analyst talking about one of the FDA documents discussing a kind of a peculiar statement that they're extending their FDA trial period because of new clinical data. I'll let you read it for yourself, but it's the way that you can see the stock acting. Obviously, we've got nice divergence on the money flow, and so that's something that we had picked up some call options. I'll just check what the expiration was here. I think they were the March $15 calls. So that's one that we've also taken a position in as well. And last but not least, PEGA. This is one that we had picked up some put options in, and again ahead of an earnings play. Now they have posted a fourth quarter loss, but their guidance was above consensus. Their financial year 16 above consensus, so it's had a shift. It's had an upward movement in after hours trading, but this is going to be one that we're going to have to see how it trades tomorrow. Obviously, it's very thinly traded, given the volumes only was 481,000 yesterday, 465,000 today. So we'll just have to wait and see what the price does tomorrow. But the key thing about this stock is you can see that there is this long-term upward trend line that it had broken down beneath, and you can see it keeps trying to test it from below and has been failing with some very toppy candles. So this will be one we'll have to wait till tomorrow. Now, in terms of new potential positions, again, there's still the long bias in the market. So we're still looking for those long hedges while the open range continues. There's three ones that I have. One is VRNG. Now this has had a very strong move in the Twigs money flow and is just sitting underneath its moving average currently. But big move, and it's now sitting on top of that little support line. I'm looking for a break of 297 as an entry criteria. And now day traders may be able to trade that differently. You could also look for a pullback, obviously, to support, pulling back to the moving average here around 242 could be another possible, or let's say 245 as a possible entry point. What's the low of today? The low is 241. So yeah, I'd actually use 246 as a possible criteria, or a break of 297. And the reason why is that obviously if the uptrend is continuing, we want it to make higher highs and higher lows. If we pulled all the way back to the moving average, that would mean that's a possible reversal candle, because we've now gone to make a new low. So we want to be thinking about what the uptrend continuing would mean, which would mean a higher high and higher low. So I'd be looking for at least 246 on the low end, or a breach of 297, making a higher high and breaking through that resistance. My target on that would be 353. And the stop loss would have to, I'd be looking for placing that after the trade had started, because we don't know where that will trigger. But I mean, conservatively speaking, 215 is the support, so it's going to be somewhere above there. CAI is the second one. And I would be looking at, this is obviously one we've been talking about before. It came up on the Fallen Angel scan back on Wednesday the 17th, and had a big push, was up 19% the next day, has kind of just been rolling over. Now what it needs to do here, this is where I would definitely wait for a breach to the upside. I would wait for a break of 743 to break through the overhead moving average resistance. The stock seems to be respecting the momentum-based support, so I want to see a break of 743. And I'd be looking at a target of 847, which is just underneath the low of that candle at 871. So popping up into that area, also considering the high of that candle at 856. So I'm looking for kind of just a compromise of underneath both of those. I'd be looking at a stop loss of 678. And again, you can see that very strong flow of money flow coming in. And last but not least is EGL. Now this one trades a little lower volume, but kind of a very interesting chart. You can see it's had a big drop down from $30 all the way down to 12. So it lost a huge amount of its value and is just kind of curling over, has broken through its moving averages, and is just testing that horizontal resistance line you can see here. And I would be looking for a break of 1409 on this one. And you get the high of this candle was 1373. The high of this candle was 14.06, and that's why I say 14.09. I'd be looking at a stop loss of 13.35, but the target is quite generous, and just getting up to at least that Fibonacci would offer a first target of 16.83, but possibly even higher, actually up towards the 2080 level. So looking at say 2063. Okay, so that is your executive summary for tonight, and I hope that helps. And again, just a couple more days left of the positive bias open range in terms of our longer term short positions and so forth. Tuesday is going to be the day where we get to evaluate whether this downward trend has been broken, or whether it's simply been a big short squeeze. So we look forward to seeing you in the next executive summary and all the trading rooms to come. Take care and happy trading.